Hi, my name is Andres Morales, and I'm your local real estate broker, currently licensed in the state of California and the state of Washington. Today, I wanted to share with you information about the Economic Opportunity Mortgage Loan Program, or also known as the EOM program. So, this specific program is designed for low to moderate income households who are interested in purchasing a home or refinancing their current mortgage. It is also available for borrowers looking to purchase or refinance properties in qualified census tracts. The EOM program makes home ownership more affordable with competitive interest rates and no private mortgage insurance. You heard that right. No private mortgage insurance. The EOM program is a perfect home loan program that provides lower monthly payments versus traditional loan programs, which is great for first-time home buyers and for people who have limited credit, which is something I'll talk later on down as I go further into the specific program. Now, this specific program, in order to qualify, the property does have to be owner occupied, and the property types allowed in this specific programs are single family residence, condominiums, and 2 to 4 unit properties. Now, on this specific loan program, there is no mortgage insurance, and they lend up to 97% loan to value on purchases. They also allow refinances, and they allow up to 97% loan to value on a refinance when it's no cash out, and 80% loan to value when it is cash out. Now, if you're doing the refinance up to 97% no cash out, there is no mortgage insurance. Now, you may ask yourself, how can they do this loan with no mortgage insurance? And the way they do it is they price the mortgage insurance into the rate of the property, or into the financing that, or the rate that you're going to be paying on a monthly basis. Now, that said, you would think that the payment on this specific loan would be higher, but if you compare it apples to apples and what I've seen with experience with people who I help through this program, that's not the case. Generally, the payments are a lot lower through this program, even though the private mortgage insurance is being equated into the financing. You still get a lower payment when you compare it to an FHA. Now, when you compare the EOM program to an FHA, to a conventional, and to a VA loan, you have the EOM loan program, which is 97% financing, only 3% down, and there's no mortgage insurance. You got the FHA, which is 3.5% down or 3% down, and there's a mortgage insurance on the FHA for the life of the loan. And the only way that you can get out of that mortgage insurance would be either by selling the property or by refinancing out of the property into a conventional loan. But generally, you could only do that if the loan to value for your property is 80% or below, and it's going to cost you a lot more money. Now, the conventional loan program allows you either 3% or 5%, but then you're going to have the mortgage insurance until you reach a loan to value of 80% of your loan compared to what the property is worth. On the VA, you get 100% financing. There is a 2% funding fee. However, you have to be a veteran in order to qualify for that specific program. And okay, so that's that on those three programs. Now, when you compare all three of them, on the EOM program, that 3% down payment that you have to come down with, in many parts of the state, even in California, with some of the down payment assistance programs, you could get that 3% as a down payment assistance programs from local nonprofits. And I know that you could do that the same thing for other states such as Washington as well. Now, there's no PMI required. And the other great thing about this specific program is that there's limited credit history that is also considered. So if you have limited credit history, the EOM program allows you for alternative non-traditional credit items such as utility payments and rate payments in order to be qualified, and they will consider those payments when making a decision as far as your credit history is concerned. Now, in order for you to qualify for this specific program, the property needs to be located in designated census tracts, and your annual household income falls below the area median income levels for the county where your property is located. Now, the median income is for all the people over 18 who live in the property, so that's a key term. So what I'll do is I'll put additional information down below on the description section, and I will put some of the lenders who offer this specific program. Now, this program is unique to Union Bank, and they're as a bank, they're in California, they're Washington that I know of, and I believe they're in Nevada and Arizona, but don't quote me on that. There are other lenders who do offer this specific program, who broker out to Union Bank, who might offer better pricing or better underwriting guidelines, and I will put that information below. If you have any questions for me, feel free to call me. My telephone number is 949-306-9260. Now, I want to thank you for actually taking the time and watching this specific video. If you found this information helpful, I will ask for a huge favor. Please share this information with anyone that you feel that might need this information in order to make a decision to purchase a home. Now, I feel strongly about home ownership in the United States because I feel that that's the basis of our community and the basis of the American dream and the country and the great nation that we live in. So please share the information. If you have any questions for me, you could also send me an email at thankyou@andresmorales.com. Again, I want to thank you for taking the time and watching this video. Have a blessed week. Talk to you later. Bye.